it.
Welcome to Wage Cucking with JMO.
All right, guys, welcome to another episode of Wage Cucking with JMO. Today we have a good friend of mine, Catherine. Catherine, how you doing?
Doing well. Hi, JMO.
Give me a little bit about your background, how you got into crypto, and maybe what you're working on now.
Yeah, so one fun fact that I just gave out at a recent party is that I've never worked outside of crypto ever. So I started my crypto journey when I was in college by my good friends at MIT. At the time I was at Harvard and I was just always into the startup game, just hang around with friends going to college. But eventually I kind of got my first involvement full time with Ethereum Foundation, where I helped them set up the Ethereum grants program that right now is called the Ethereum Support Program.
Mm-hmm.
And then after that, I became a user for a while in DeFi Summer before coming to help band with their strategy, band protocol, the Oracle company, to help them with their strategy, partnership, and overall. And now I am working as a strategy / analyst at a fund in Thailand.
So what year were you at Ethereum Foundation?
I was at Ethereum Foundation from 2000, I think like late 2018 to early 2020.
Did you have any takeaways from your time there? I know the whole Ethereum landscape was like substantially different back then, or right now it was really popping off, but back then we didn't have stuff like layer 2s. We didn't have decentralized finance. It was basically in its infancy, like the smart contract platform work. There were some projects building on it, but there wasn't like a huge robust ecosystem as we have today.
I think back then there were very few people who saw things. I think, to be honest, in the foundation at the time, there were a lot of idealists, right? And I think they had the right people who saw stuff. I saw something, but even if the people who saw stuff technically that were exciting to them, I think very few people saw what it could be, because that was before people started talking about Uniswap. That was before DeFi. So what I took away from that is that sometimes when you work in a project as a builder, you tend to be bearish, and you tend to be bearish because you see so many things to overcome. But if you keep a certain vision in mind and if you keep walking, sometimes you need to step out and be bullish.
I have a few friends that were like really in on the ground floor of Ethereum, and they all seem to be kind of crazy people. Like, well, one of them refuses to have like a cell phone or refuses to be on the grid, takes trains everywhere because he doesn't want to use his passport to fly, and it's like people like that. So it felt like a lot of the OG Ethereum people were just kind of like crazy people that wanted to avoid the eyes of the government, or like the whatever you want to call it. So after Ethereum, you moved to Band Protocol. So for those who don't know, Band Protocol is an Oracle company. Essentially, they generate price feeds for decentralized finance, centralized exchanges, whatever price feeds are used for. I'd say the biggest player in the space is probably Link, Chainlink. So your time there, I guess Band's a little bit of like a smaller company compared to Link, and Link has quite a bit of the market share. What were kind of the issues you saw there in terms of the company growth, and is there anything that you took away from that, like how to overcome that in order to build the company to what it is today?
So I think Ban was one of the few company that still survive from the first bear market, the first one in 2019, right? So by the time when I found them, they were getting ready for the upcoming bull market 2020. And their problem was they wanted to scale things and they wanted to experiment with things. And I audited the company and I came up with, two things that they need to work on. First of all is they need to scale the team, because believe it or not, when you are an Oracle price feed, you are essentially in some way our security system, because if you feed the wrong data, then you're liable to a lot of false liquidations.
Yeah,
right?
for sure. Like it's a big problem. It's a big problem when like the Oracle feeds aren't correct, because now like especially like some of these protocols have billions of dollars that are like being transacted. So if they're transacted at a wrong price, it's quite detrimental for them.
Yeah. So I didn't realize how how much of weight oracles were carrying in DeFi until I worked on it and I started having alerts that wakes me up in the middle of the night with the rest of the team. But one thing we want to make sure is that we at least streamline it in such case that at least when you go and help new projects, you can reliably support like a good price feed, right? And make sure that it's still decentralized. Because I know that one easy way to get away with this so that you don't feed the wrong price feed is to manual feed and just like give static feed, for example. But there will come a day that you'll be exposed and people will exploit you. So it's a hard technical problem nonetheless. But what I learned from there, so what I did there in terms of growth in a company like that, first of all, like, if you need to grow your team, but grow it with a good sense so that you don't overgrow your company. So I went there and then I helped the team grow to exercise with, at the end of the day, towards the end of, I think, 2021, when there was like an Ethereum killer narrative. Back then when Optimism was about to launch. Before that, there was Celo and Near. We got to a point where we were able to just be the first oracles that get launched on these ecosystems. So if you recall, Optimism, back then they did whitelist the contracts, which means they gave the projects to launch. And without us, Perpetual Protocol, which was the first protocol that drew in meaningful TVL and Optimism, they wouldn't be able to launch. Because they relied on Oracle. So one of my project of the year was to get us to the point where we could at least technically be there for projects in these new ecosystems before our competitor did. And we did. So that was something that I gave myself a little pat in the back for.
Very nice job. The Oracle space, I feel, is kind of interesting because I feel like Chainlink has quite a bit of the market share. And there are like quite a few alternate projects or alternate products, like Ban being one of them. But do you have any thoughts about like the future? Like, will all crypto, all DeFi? And I think that the use case for oracles has expanded quite a bit as like decentralized finance and products built on chain have increased. Like, for example, a few years ago, we didn't have synthetic assets on chain, and now there's like multiple platforms building synthetic assets on chain. So people are trading like stocks, they're trading like whatever through Oracle based price feeds. So I feel like there's always going to be demand for like good pricing oracles. But in the future, do you see basically everyone using Link, or will these smaller companies be able to survive in terms of like grinding out their little niche in the market share in order to provide like price feed data to certain protocols?
I mean, like, knowing what I know, because like I was working on many different fronts, including the business side. For example, when we talk about stock price, one thing that people do not know is that it is a heavily guarded commodity. As in, say, in the New York Stock Exchange, they usually license out the use of their data, and one does not typically just get a license to use their data. So like, in my opinion, right, there's even like legal innovation, because how do you even think about, well, if you're displaying stock New York, like in NYSE prices on screen, and it's on blockchain and it's accessible to everyone, is it still exclusive to the licensor only? So I think in terms of like the data and Oracle, there are still rooms to innovate from like even like the legal front, down the way, all the way down into like technology front, like how fast can you feed? Because you're still limited by, say, the TPS, right? Every time you send a data feed, what you do is you actually send the data price with a transaction, as if you would send some money, but you would just send no money, just gas, and then a message, which is the price. So that's limited by the block time, the TPS. And to work around that, to make sure that the protocol, like the synthetic stocks protocol, are up to date with price, is a challenge too. So from legal to operation to technical, I think even the data industry in crypto, which is actually very vital, I think it still has a lot of room to innovate. And
that makes sense. I think one of the bigger issues with data feeds right now is like it's important to have like real-time data or close to real-time data as possible, because a lot of the asset prices fluctuate quite a bit, but then there's always latency. So like a big perpetual exchange on chain, DYDX, it's gained quite a bit of popularity just because it's in theory a decentralized exchange, but it's plugged into a central limit order book, meaning like if you're like if you're a market maker or you're a trader, you don't really deal with these issues. But if you're doing like Oracle based price, but like there's limitations in the speed of processing the price feeds, it's mainly based, I think, like on chain. So like the more validators you have like on a certain chain, the higher the latency is. And then like the latency matters quite a bit, especially if you're getting like price feeds on delay. There's going to always be like toxic flow within these exchanges looking to exploit these. So like the previous podcast I recorded, I don't think it's out yet, we had Jordy Alexander from Selene Capital. I mean, he was like I guess he's known for speaking out against like the current model of exchanges on chain. Like he doesn't believe in the GMX model, which is basically an Oracle-based swap protocol. And he also doesn't believe long-term in the Uniswap automated market maker model, just because if you're a liquidity provider on any of these platforms, you're essentially counter trading the people that are using the platform. And as crypto gets bigger, like the more like big funds, the more like highly skilled traders that get into the space, there's going to be more what they would consider toxic flow, meaning like people that are extracting money out of the ecosystem, which is like a net loss for the LP provider. So like eventually all these LP providers like on Uniswap or GMX will realize that they're losing money providing liquidity and pull their liquidity. And then like eventually if there's no liquidity on chain, the markets still die. So you have any thoughts on the current state of like the on-chain exchanges? Are there any developments you think that are going to take off that will change the trading experience of people on chain?
That are online right now, I don't see any. Like I know a team that's working on, I think a lot of like the on-chain exchanges right now are moving instead of like from 0 to 1. Right? Like I think GMX was the first one that tries to get back to 0 to 1, but on that I see it more like from 1 to 2, as in they form different things and then they pieces like different things together and then they try to Frankenstein it. So for me personally, no, like even like the one that I remember from talking to the teams, it's not that interesting to me. I think a lot of innovations are happening more on like say the UX side, right? Because that like as a builder, that's a low hanging fruit. If you can make the experience as if you're on a centralized chain, they're hoping to get users more, but it doesn't solve the problem of liquidity or the actual seamlessness of the transactions, right? So no, unfortunately. I'm waiting. Yeah. How about you?
It seems like there's definitely room to improve the current models. So yeah, I want to talk a little bit about your current job at the fund you're working at. Would you say you're more on the like venture capital side of things now, or what exactly are you doing?
Actually, I should look at myself as Swiss Army knife. So because I have a strong because I also have like some technical background from my computer science education, and I also have been a builder myself on the strategy side. I just kind of do everything, just keep my eyes out.
You have to flex your computer science from Harvard degree to the viewers here.
yeah, I did, but I was that person that studied computer science, but never really. I wouldn't consider myself a coder, right? But it does help me understand, for example, like I understand technical elements enough to understand things like infrastructure, and be able to see it at like a medium height view of things. You know?
That makes sense. So yeah, I wanted to talk a little bit about like the current state of crypto, and maybe we can compare it to like the last bull run. A few topics I thought of is like the current landscape of decentralized finance. You think it's long-term sustainable in terms of a lot of, in my opinion, a lot of decentralized finance is fueled by incentives and sort of printing money out of thin air. Like every platform has a token. Every layer 2 is going to have a token. A lot of these tokens are, emissions tokens that like if you provide liquidity or if you use the platform, you get them. And then they're sort of meant to be sold. And then if you look like the previous DeFi summer, which was, I guess, your first foray into decentralized finance, a lot of the big protocols, like the biggest ones like Uniswap, SushiSwaps, stuff like that, a lot of the LP rewards were in their native token. And I mean, fast forward like a few years, we can look at the trajectory of the sushi token compared to what it was before. Like the rewards have gone down, the LPs are losing quite a bit of money. And then, but on the other side, there are quite a few new innovations in decentralized finance. And now we have stuff like multiple layer ones that offer decentralized finance that are in theory better than Ethereum, like that they process transactions faster, that they have a lower latency, but then also there are like a ton of new protocols that have different approaches to DeFi. So I guess in like the next year or so, how do you see the market going in terms of like on-chain trading, decentralized finance, stuff like that?
So actually, like, put a bit of thought comparing, say, like, because I think the bull run of 2020 provides a study case. Like, it gives us like a study case look at like, okay, what happened there, right? And I think there were quite a bit of like a tailwind of like with on a macro, you get capital injection from COVID, right? In terms of infrastructure at the time, you've got a real 0 to 1 innovation. Like, okay, with Uniswap, it's AMM, and with SushiSwap, it's just the invention of like the second pool and the start of ideas of how you can the pool two, which is like the incentives, right? And then after that, you got Andre that kind of builds on the vaults, and you start getting these derivatives that automates how you farm these things, and that became the 1 to 2. And then I think largely, very roughly after that, it's like different iterations of how you can maximize yields based on the people that figure out how to get yields in the first place. So when I look at this one, and then you got a lot of Messiah. That's also another feel like, you know, a group of people thesis that one thing that really helped with people understanding the last bull run was you have a figurehead, a Messiah.
Yeah.
And it was great for getting people eyeballs and attentions, and it drills everything down simplistically. When I look at this year, I see the things that we're talking about, right? We're talking about ZK rollup. We're talking about layer ones. What are you talking about? You know, like multiple layer one opportunities with theoretically should be better than Ethereum. So all of these are infrastructure, sort of, right? Like it's not, we're not currently talking about, say, a DApp global. That would be a game changer, like something innovative equivalent of like an AMM. So infrastructure is something that I don't know if you've come across this like infrastructure theory that was circulating about half a year ago.
No, I have not.
So like it shows this graph that like usually you have an infrastructure, right, that lays like a fundamental ground for possible things to happen. And then like things will be built on that infrastructure because infrastructure provides the limits of how much innovation can happen. For example, if your block time is still like super slow, there will be limited things that you can do. Like continuous data feeding wouldn't be possible, which means like super cool, maybe synthetic stocks or stuff wouldn't be possible because the infrastructure is not there, right? But let's say, so you have infrastructure at this level, and the dApps that get built on here would just exhaust everything. They would iterate. They would go from 1 to 2. They would Frankenstein everyone else, and they would just exhaust everything that you have here. And then you get into a point where you're stuck until you build a new level of infrastructure that allows a new type of innovation to happen. And using that framework where we are right now, I feel like as a community, we're coming to realize that, like, you know, we have been there for a while with the 1 to 2. Let's see if we can come up with new infrastructure, right? And I think that comes down to like tech. And I think that's kind of easy to evaluate. So people are talking about CK, and I think that's why people are excited about it, because it kind of gives a reason to hope. Yeah,
that makes sense. So going off that, like the new infrastructure that's being built, I feel like there's sort of like two schools of thought right now. The first is being Ethereum is going to take over, and people are going to build on Ethereum through layer twos using Ethereum as a base layer for settlement and security. And the other theory is we're going to have like a robust ecosystem of alternate layer ones that each have their own like unique tech stack that provide something unique that allows like certain projects or certain protocols to build on top of that and use that as like a solid base layer for what they're trying to accomplish. So in terms of, I guess, like the capital, the user base, the number of people, like the overall flow of crypto in the next year, how do you see this going? Like, do you think that alternate layer ones that provide superior technology are going to take market share from Ethereum? Or are you more bullish on, say, Ethereum taking over and stuff like ZK Sync, stuff like Starkware, stuff like Arbitrum Optimism, capturing more of the market share compared to alternate layer ones?
I think alternate layer ones have to execute their launch really well. Because one thing, so for Ethereum ecosystem, including layer twos, one thing that they have a leg up is that if you go from layer one Ethereum to layer two, you can still hold ETH as ETH, right? So there's no security risk in terms of I have to hold ETH and then you lock it up in a contract and then I get representation of ETH like wrap ETH. So I think in that sense, like capitals will move with more ease. Even though that it's still going to be a little bit of an experience, like there will be like withdrawal, like there will be duration limit and so on and so forth. There will be like latency. So, but in terms of layer one, so I think capitals will get there like a little bit more tough. The experience is not great. Like you send the money into the void and you just pray it shows up on the other side.
Yeah.
And then hopefully the contract doesn't get attacked. But
yeah.
This doesn't matter much to retail, but when you think of big players and you want big players to come in because that's a huge chunk of capital, it's going to be a problem. And then, and the layer ones, I think if you look at the layer ones that are exciting this year, we're thinking Aptos, we're thinking Sui, right? And Say. And I think I like the angle that they, even though with the infrastructure that's even like with really high TBS, they try to highlight that through a specific use case like gaming, right? Because at least you're trying to create a niche market apart from Ethereum, because it's going to be really hard to try to emulate a more mature ecosystem like Ethereum. So like for me, in order for L1 to take over that, I look at this as like, if you're a startup, you have to find a niche that you saturate really well and then you grow from there. Because you want to do the DeFi game head on, it's going to be a tough game to catch up.
Yeah, for sure.
In my opinion. Yeah.
It's difficult to get like a sort of natural user base for DeFi when there's so much DeFi that already exists. You have to build out the platforms. You have to like figure out where the liquidity comes from, figure out where the users come from. You likely have to run incentives on your own chain, like give out your own native token as incentives in order to incorporate that or to draw users to your platform. And that's probably not long-term sustainable, like meaning the initial users that come to your platform, because the incentives, you can't just be giving away free money for another 10 years or something, right? So then once the incentives sort of dry up, they may leave and go back to where they're at. So you think that these alternate layer ones, they're basically looking for a specific use case to draw like a small subset of the crypto users onto it, but they're trying to get it to be like long-term sustainable. So like the example for the move chains like Aptos and Sui, that they can advertise, like high speed, low fee transactions, and then maybe like a lot of games would want to build on there because like in gaming it requires quite a few transactions, and a lot of even the Ethereum rollups aren't really built to support that.
Yeah, I mean, I hope that's what they do. I think it would be good for the ecosystem, right? If somebody else figure out a new use case other than DeFi to attract a new group of users and capital. And I think that's why a lot of VCs were investing, and some people would argue over investing into gaming last year. But I am personally doubtful about the development cycle of these things that are about to come out, because like good things take time. Even Uniswap, they've been around for a while before they gain traction, right? Before they fine tune stuff. And then once like a big milestone innovations are there, I think it's easy for their people to iterate and experiment. But I think it needs time for that to be done, right? Yeah.
So how much of the success of alternate layer ones do you think is actual technology, or more of like the team, the marketing, stuff like that?
I think crypto is still largely driven by capital. So I think
Uh-huh.
like more of it's actually marketing.
Uh-huh.
Yeah. I,
Yeah.
I'm
Yeah,
going to
I
confess.
sort of
Yeah.
feel the same because I see quite a few of these like alternate layer ones that like seem like they're pretty good at technology. Like like an example comes to my mind is Near, which it just feels like it's pretty far along on the development curve, like almost further along than Ethereum. But with the new layer ones coming out, with Ethereum layer twos coming out, like the token price and then the uses sort of fallen off. So to me, I think the layer one with the best technology isn't going to be the big winner in this, which kind of sucks because you sort of incentivize people to spend less time and focus on technology and development and more on like capital raising, marketing, trying to drive a user base.
Yeah. I mean, this is what I talk to builders all the time. And also like, because let me confess, right? When I got into crypto, I was literally in it for the tech. And
It's not just a meme, you're in it for the tech.
I'm one of those people, and I have no regrets. But I mean, there's a place for everyone, right, in the ecosystem. And I think like the people who are in it for the tech, sometimes even the builders these days, because now I work at a fund, I see things more from a different perspective. And
Uh-huh.
then you kind of see more how it comes together. And if you look at crypto, it's just going through this phase. You just have to look like, say, if you want this to be around for
Uh-huh.
actual adoption in 20 years so that we can all get our financial sovereignty,
Uh-huh.
then this few years can just be a period where we're just gonna care a lot about capital because that's what we need to build meaningful things to grow. And personally, I'm kind of okay with that. It's just a part of the development cycle of the overall industry, right? Like the internet age has to flop first, and it took a long time
Yeah,
before
for
it
sure.
flopped, before it rebuilds itself up, rotation, all these
Yeah,
things. Maybe we'll go through that.
yeah, I feel the same. But like I mean, crypto's been around for quite some time now. But if you look at like the rate of growth in the past few years versus like the previous 10 years or something, it's staggering. So I don't see any
Mm.
reason why crypto won't grow in terms of like infrastructure technology at like a super rapid rate that sort of opens the doors for new cool stuff that we don't have right now to be built on chain.
Yeah. Yeah, so it's just like even the capital injection, all these things, like at some point you tolerate and you appreciate it. But I
Mhm.
think like sometimes just think at one point I think we'll come to realize that okay, it's too much of a distraction now. But
Mhm.
going back to like what was your question? I'm sorry.
Oh, I
Like
don't
what
even
were we
remember.
talking about? We are horrible. No,
Yeah.
I was saying it for the tech, but
Oh yeah,
after
you're in
working
it for the tech. All right.
but after working at a fund, you get
Yeah.
different perspective. And even for builders
You're
these days, right?
you're in it for the money now.
But I'm in it objectively now. Like you have to know, you have to be able to place yourself on the timeline, right?
Mhm.
Like if you, for example, if you know that you're in the first internet age where it's gonna flop, if you know that, the way you go about it would be very different.
Yeah.
Even if you are a strong advocate for the internet, right?
Uh-huh.
You have to be objective and have a vision and just know what forces you can control and not
Yeah.
control and what do you flow with, right? So that's what I learned, and that's what I hope more builders learn, because I think a lot of, say, great builders that I have talked to, they are so, even the kind of people you talk about early days Ethereum, they're so focused on that if the environment in the last few years has changed a lot, influenced by capital, if they're not caught on to that, we're going to lose these people behind and we're not going to get meaningful innovation as
Yeah.
fast as we could.
Yeah,
Yeah.
that makes sense for sure.
Yeah.
So one other thing I wanted to talk about, I knew you were looking into NFTs or doing quite a bit of NFT
Oh,
research.
yeah, yeah,
I'm
yeah.
not a big NFT guy, but I've sort of been following quite a bit of the development. So like I traded a bit when Looks Rare came out. I've been following like the Blur stuff. The NFT game on Bitcoin has been taking off recently. Do you have any
Mm.
thoughts on like the future of NFTs, like if they will have long-term value, or was it just a phase and we're going to move on to the next crypto cycle?
I think NFT might actually has its own cycle.
Yeah.
Like, I mean, I'm thinking as I talk here, right? But if you look at, like, the reason why I got interested in NFT because it was a different asset class.
Mhm.
as you would like gold versus painting, right? Painting allows you certain value proposition.
Mhm.
Maybe in the eye of legal, in the liquidity of it, it has its own market in the way that gold doesn't, right? And for me, I think like last year NFT, there were a lot of hype. The great thing that it did is that it got a lot of eyeballs onto general blockchain technology from the
Yeah.
general public, right? So that's great, but it seems like we couldn't sustain that. Uh, so maybe,
I also feel that like that's not always good, especially when you have like these NFT projects that like Rug or Go to Zero or like these social media influencers that release NFTs just to raise money. It sort of gives like a bad rap to like first time crypto users. They buy
yeah,
their favorite athlete or their favorite rapper's NFT and it goes to zero, and then they think crypto is a scam, which is
yeah.
not great for the ecosystem.
No, like I actually was really, I was hoping that actual artists that were doing NFT, like Murakami,
Uh-huh.
the guy with the smiley flowers.
Yeah.
I was actually hoping that I was actually one of these artists who, they have, you know, they have had made their whole life about art, and this is their identity, this is their livelihood, that they would be able to bring a certain way into the project. But
Uh-huh.
I think like everyone, right? Not just the people who are crypto native, or not just the artists, like I'm trying to understand what this user group wants and what value can you add using this medium,
Uh-huh.
digital as a medium. It's still going to be a new thing. So I think it takes more time. It's unfortunate that people get rugged, but I still have hope that one day, the builders in the NFT space, like the artists, they would be able to, somebody would come along with a good sense of how to utilize the tech underneath it,
Uh-huh.
with a sense of artistic vision, right? And be able to execute something that is one of a kind.
Uh-huh.
And I think that if that happens, then I think we might have a chance of breathing new life into it.
What about the current NFTs right now that people would consider blue chip NFTs? So, like off the top of my head, stuff like Bored Ape Yacht Club or CryptoPunks, Azuki's, stuff like that. It seems like they were hyped quite a bit, and they had their own crypto cycle where they pumped quite a bit, and now the liquidity, the floor price is quite a bit lower. Do you see those maintaining like market share, maintaining value, or do you think like the future NFT landscape is like more known people, more artists coming into the space, issuing their own NFTs, and those retain value over like the original punks?
I mean, there are two things now, right? Like I think that those commodities are like appealing to two different markets. Like the artist markets, like appeal whoever the artists want to appeal. It can be the mass generation population. The avatar NFT, like not exactly avatar, but like the ones that you mentioned, Bored Ape Yacht Club, Azuki, these were, or even rocks, right? These were originally appealed to the DeFi people, like
Yeah.
the crypto holders people, and it became kind of a relics now. So the people who could afford that in the first place, I don't think if they were buying it because of the gain that they got from the last bull run, I don't think they're gonna. It became a badge of honor that I don't think they're going to just sell, and it
I see.
will always somehow retain that status. I mean, I could imagine that like 3 years from now, people will be like, yeah, at the time I went through all of that journey, kid, and I have a board ape to show for it.
Yeah.
Like I can see something like that, right?
Yeah, but it
Yeah.
seems like stuff like Bored Apes are trying to build utility and like actual development for their NFTs, where something like CryptoPunks is. I compare it with like Bitcoin versus Ethereum. Like Bitcoin, there's almost no development. I mean, there is a little bit development, but its selling point isn't that it's going to be this awesome layer one smart contract protocol where people can do everything. It's just there. It's Bitcoin. And I feel like this is the same for the initial
Mm,
CryptoPunks, right? That there's not going to be like a CryptoPunk game or like alternate
mm,
CryptoPunk NFTs, but the inherent value as being like one of the first, the first to be super popularized, the distribution being like I believe it's like a free mint, right? The same with the Bitcoin
mm,
distribution being
mm.
0% pre-mine, stuff like that adds
Yeah,
long-term value. So
yeah.
you think the OG NFT prices will sort of follow the crypto or DeFi prices? Like for example, if there's another DeFi summer where people make tons and tons of money doing whatever in DeFi, you think that flows back to these initial NFTs?
One angle that I thought about this, and I'm not I by no means consider myself an NFT expert. I've never made money out of NFT, right? What I like to think of myself is I am an observer and I'd like to have some opinion. So here's what I think about NFT. NFT, people bought with ETH, right? And let's say it's especially at the big project. These are usually like whales with a lot of ETH.
Yeah.
So if I, like if I have 100 ETH lying around, or maybe like, okay, 1,000 ETH lying around, I buy a board 8, and then the market went down. Everything went down last year, right? Everything went down. I know that if I buy more board 8 and I make this money, which means I have a certain conviction, right, in the crypto economy, and I can't just liquidate all my asset in crypto. So one play that you could do is that you could hold on to these or buy even more of these NFTs, so that when the market goes up, which you have conviction in anyway, you would actually have an appreciating asset. It's like a way that you, instead of holding just naked ETH, you would hold it in form of NFT. Yeah. Because you have the upside of these projects growing, doing something cool, adding more value to the underlying ETH that is growing with it, right? Like maybe the floor price doesn't move, but if the ETH price moves back to the level where close to where it was before, then you start making investment back. And that's a part of your thesis anyway. So that's why I think that especially for these more sticky NFTs, there are more reasons to hold or even buy more if people perceive that it's going to go up and it's accumulation time.
Yeah, a lot of my friends that are like really into NFTs, they sort of see these NFTs as leveraged ETH, meaning like if ETH goes up, the ETH ecosystem it improves quite a bit. The value of Ethereum will go up, but then also the price of the NFT denominated in Ethereum will go up in terms of Ethereum. So it's sort of like a leveraged bet on their Ethereum, which I find quite interesting. Maybe I'm just like too old or I'm a boomer or something, but I look at NFTs and I just like can't understand like what's really going on. Like I look at stuff like Ether rocks, which they're selling for like 100 to 200 ETH at a time, and it's just like a photo of a rock, and I'm just too old for this shit. I don't know what's going on.
Maybe some people are just in it for the art.
Yeah, just in it for the beautiful, like 200 pixels of a rock. Yeah, I really get that.
Yeah, it's minimalism.
So moving on, I wanted to get your thoughts on the market in general, and maybe the outlook for the next, say, for the remainder of the year. Like, do you have any guesses as to the direction of crypto, especially, I guess, overall market cap? But then also how the whole Ethereum versus alternate layer ones is going to play out, how the landscape of Ethereum is going to play out in terms of new layer twos launching. All these layer twos are going to, I feel like they're going to launch their own native token. We already seen it with Optimism, Arbitrum, stuff like that. But I guess like your general thoughts on the outlook, like will Ethereum maintain market share? Will their market share grow? Will these layer twos, the token price of these layer twos go up? What happens to the alternate layer ones that have already launched or will launch? Will they lose out of market share and like sort of slowly whittle away? I
don't see a reason why the Ethereum market share wouldn't go up with the ZK narrative. Right. The question is like how sustained it's going to be.
You're saying Ethereum market share compared to like other layer ones, like Ethereum dominance versus other layer ones?
I mean, for me, even if you're trying to get onto other layer ones, I feel like the money, some of it has to be, it's going to come from Ethereum.
Yeah.
Unless you have a different opinion. But I don't see a case where you're asking for a case if I think layer one would outperform Ethereum, right? Is that what?
Yeah, or like in general, like if you take the basket of layer ones right now, or that they're launched, they'll gain market share or they'll gain users compared to Ethereum, so they'll have a larger share of the pie.
One deciding factor for me for that to happen would be seeing what kind of dApps they have lined up for layer one. Yeah, that's also still something I'm waiting to see, because this is like maybe this is where you can chime in as well. There's like the whole fundamental thing that we talked about with it, right? With the infrastructure framework, right? And then there's the actual capital flow and like capital looking for a place to land.
Yeah.
Right, because you've got a whole sector of, say, market makers who want to make a living. They want to make money back from the catastrophe of 2020,
Yeah.
2022, right? And you've got people who want to drive narrative to just take advantage of the rally or the bull run.
Mhm.
So let's say even say in ZK, what I'm guessing is that the infrastructure itself is going not to be too much of a change enough in the way it launches this year,
Mhm.
that it would provide a new, meaningful, better user experience or innovation.
Uh-huh.
And what do I mean by this? Like, for example, if we look at, and not to diss on Optimism, we like them,
Yeah.
but if we were to look at Optimism, they haven't really come out with the proof, like the prover mechanism, right?
Yeah.
And even with the next upgrade with the Bedrock, they're not able to, it's not going to come out even then.
Mhm.
What does this mean? This means that actually like the state of CK that are being launched right now, they're not fully there in terms of security. Not that people will take advantage of them.
Yeah.
But if they haven't launched the security stuff, how much do you think the other features that would actually make meaningful experience would already be out there, right?
Uh-huh.
At the same time, ZK, the reason why ZK gets launched after all the optimistic rollout solution like Arbitrum, Optimism, is because it's a lot more complicated. We have talked about CK since forever, right? And ZK is also, I'm not confirmed, but I just look at the development cycle. It's highly unlikely that it's going to be launched with the full potential.
Yeah.
In my opinion.
Yeah.
Right. So you're gonna get a chain that's cheap, that's fast. But right now, I don't know if they want it any faster. And there will be some applications that will be built on ZK that are waiting to rely on this technology. They're waiting to rely on these exact TPS.
Yeah.
Right. I'm waiting to see how that turns out, because if we actually have that feature, a new person would definitely come along, break out of this framework of whatever we're forking from each other, and come up with a new thing, right? Because it will be right. But on that end, with what I'm currently seeing with my exposure, which is limited, I'm doubtful. So then we look at L1, right? Which at least they're not trying to only compete on like the standard metrics of like TPS and all these things.
Yeah.
They have the angle of like, well, we code this in such a way that you could do this specific use case very easily. Then it's really up to them to be able to showcase those use cases, because that's really their way to get out of the red ocean.
It's
right?
to like carve out like a specific use case so that projects will use it because for their needs, it's better than like what Ethereum or even Ethereum layer 2 is offering.
Yeah. So like you're not competing in like the mainstream gate right now, because if you're doing the whole fasting, you've got 6-7 things launching this year. Right, and you're gonna be trying to pull capital from that without a native bridge. It's going to be really hard. So my market cap for L1, right? Like, I think it has a chance of growing more and faster than Ethereum if it can showcase a use case that is interesting. I like, it might not have to actually be adopted, right? But like that's something new to prove that it has a chance at establishing its own blue ocean on this side.
So you think like the price, if they carve out something like this, is more narrative driven than like actual development driven? Like if a new chain comes out and like maybe only a few projects flock to it, but it's seen as superior in some way, you think that will cause market share to increase for it?
I mean, it has more chance of the market share increasing, because remember, like there's the actual fundamental, right? Which sometimes drives the price, not drives the price. But right now, I have a sense that there's a sector of people who want to drive the price. And if, first of all, if the innovation is, here's how I think about this. If the innovation itself is new enough to first ignite the narrative, there's a level, right? First, you have to be able to ignite the narrative. And the second is to actually sustain adoption. But if it can at least fulfill the first level, then that's already something. And I think it can get there with careful execution in terms of ecosystem. Yeah.
That makes sense. So going back to ZK Sync. So one thing I find interesting is even though ZK Sync and there are quite a few other layer 2s are Ethereum driven or Ethereum based for now, like they're separate companies, right? So you talk about the value of the layer 2 technology sort of being reliant on like the progression of the base layer, right? Like as the base layer scales, the layer 2 scales. Do you think it's possible for like a company like ZK Sync to say, listen, Ethereum is great and all, but there's this alternate layer 1 that we can build rollups on that their tech stack is substantially better. Why don't we just move to them? And that drives mass value to that chain.
I mean, if you just look at it from like a fundamental perspective, I think that's why not?
Yeah.
Right. But I'm guessing that the reason why they're doing it off of Ethereum because they understand the importance of capital flow.
Yeah.
And the ease of capital flow.
Yeah.
Right.
So you think these companies are more concerned about like the capital flow than the actual technology, at least for now.
Yeah, because if you think about average people, a lot of like when we use the Ethereum chain, we don't often stop and appreciate the technology that goes behind Ethereum.
Yeah.
We just get upset when our transaction doesn't go
through. Why is gas so high? Why is it so expensive?
Exactly. Like what? It didn't go through and it took my gas money, right? That's the worst. So I think like I hope the people who are working on the business side of this technology are aware of that, right? And and if you were to wear the builder's hat, then I think it's like sensible for you to position yourself in a way that, say, if you as a new team, you haven't figured out how to really advertise for your value add in your technology or bring meaningful new experience as a value add, then you would have some capital to sustain yourself before you do so. And especially if all of your other committers are building on, it's like connecting to this, like, you're building this pipeline to like this land with a lot of capital. You're building a highway, right?
Yeah.
Everybody else is building the highway. And you're like, well, and and you're a company with doing similar things with the same technology underneath. And it's a lot of risk for you to go off of the mainland.
Yeah, for sure. Yeah. I agree with that completely. So one last thing about like the future outlook of crypto. So I think in general, in the past year and a half, crypto, at least like the market cap, the prices and stuff like that, have followed the current macroeconomic trends, I'd say. Like there was this whole meme going around that like Bitcoin is basically the same as like the S&P 500. Like S&P goes up, the Bitcoin goes up, stuff like that. So like I guess for the next like year and a half, do you see this trend continuing, or do you think there's going to be like decoupling of crypto assets versus like traditional markets?
I don't think I'm the right person to say that. You actually might have like a more concrete view on that. I mean,
it's a little bit out of your wheelhouse.
I mean, yeah. I mean, I think there will be like more people who are more suitable to answer that question, right? But I think there's like there are hopes in crypto. Like let's say people hope, like with the last Bitcoin narrative being an inflation hedge or like being like recession proof, right? Like there are these narratives that tries to drive the decoupling of Bitcoin and the overall stocks market and the economy. Right. So there's that. And we see how that pan out. I think there was a year where it correlates really highly, like in the bear market.
Yeah.
Right. But usually it decorrelates on the way up. Yeah.
Yeah. I mean, it has to in bull markets because like traditional finance markets can't go up like 700% in like one cycle, like the crypto markets.
That's true. I don't know. I just don't see a reason that it would decorrelate on the way down right now. I actually want to hear your opinion on this.
Do you want my opinion?
Yeah.
I actually think that like crypto is going to decouple from macro quite a bit, mainly because a lot of like the value proposition of crypto is sort of moving money outside the traditional financial system. So like, I don't know if you follow like the recent events of like Signature Bank, Silvergate, Silicon Valley Bank. Basically, there are like a lot of banks in the US and even in Europe that took in a lot of capital, mostly from like tech companies in like maybe 2020. And they put all the money in like mortgage-backed securities and stuff like that when interest rates are low. Not now interest rates are high. If people start withdrawing, then I think there's probably like 50 or so Silicon Valley banks that aren't exposed yet because people aren't taking deposits out. So like a bank will never go insolvent if no one withdraws money, right? If everyone keeps their money in the bank, it's the same with the FTX situation. The only reason why FTX went insolvent was because there was FUD about it, and then like everyone would try to withdraw their money, and then now the money is all gone. It's the same with the bank. Every bank runs in a fractional reserve. Their investments or their positions aren't transparent, and like all their positions are marked as unrealized gains or losses until the position is closed. So if you buy a mortgage-backed security in 2000 at like 2%, and now the rate's at like 5%, if you sell now, you take a loss, but you're only forced to sell now if people are withdrawing money. So the U.S. government in this whole banking crisis thing, they made it a specific point in order to sort of weed out the crypto companies, like to shut off, or at least attempt to shut off the fiat on ramps, off ramps into crypto. So like a lot of these banking, like for example, I believe Signature was taken over by the New York Fed, even though they weren't really insolvent, but they just decided to take them over. And they tried to resell the assets, but one of the stipulations on them reselling the assets is they would have to shut down their crypto department. Because I think the concern with traditional finance is the U.S. government is fine with these banks going down, because like they can just bail them out and then issue more debt. And as long as these banks are buying government debt, like the money stays within the system. Even stuff like GBTC or potentially like a spot BTC ETF. If people want to invest in crypto, they in theory can buy these, but it's not really crypto, right? Because their money stays in the system. Like you hold GBTC in your bank account or in whatever account. You're not looking at like self custody. So they only have an issue when money starts flowing out of the system, when people are transacting with each other using crypto only, using decentralized exchanges, using peer-to-peer exchanges, stuff like that. And I feel like that's a big fear for them. So in the future, I feel like if this economy takes off, if people stop using banks, stop using traditional finance, start transacting more in native crypto, that like start using decentralized exchanges, stuff like that more, then like the more and more this happens, the less and less like traditional finance is related to the value of crypto. And then as crypto develops, there's going to be more products that are developed on chain. So like what we talked about earlier, like especially with the invention of Oracle price feeds, you can trade synthetic assets online. So if I wanted to buy Tesla stock, like Tesla dumped like 12% the other day. If I wanted to buy the dip and buy Tesla stock, before you would have to go through a brokerage. Well, you have to deposit money from a bank, but if there's a platform that allows you to trade synthetic stocks, you could just like hold the Tesla on chain, not have to use the traditional finance system. And like as money flows out of that system, like I feel like the more and more decoupling will occur between the traditional markets and the crypto markets. Yeah. So those are my thoughts on the issue.
Yeah, I mean, I agree. I it's going to take a while though. This is like a long game, right? Like if we are successful with this like massive experiment that we're in, then that's going to happen, because what happens is that we have our own economy, and then in some ways the traditional finance becomes less relevant. Yeah, cool. Yeah, that's why the New York Stock Exchange got their data. they don't want you to build synthetic stocks, you know.
Yeah, for sure.
And not, yeah. Okay.
One final question before I let you go today. You're the first woman that we've had on the podcast. I feel like that crypto is a bit of a boys' club, similar to like investment banking, traditional finance, stuff like that. What are your experiences in the space being a woman? Like, is there anything you noticed? You face discrimination? Like, are you sometimes not taken seriously, or do you feel like it's like a fair playing ground for you?
I mean, I just realized that I just have to add value. Like if you add value to someone, and if they're smart enough, they will like, oh, interesting, and they'll start talking to you. So I think there isn't much there. Other than that, I think like it's you have to like what you do. Like for me, like knowing what you're good at, right? For example, I realize that some people are very good at building their stuff, and I'm very good at talking to them.
Yeah.
I'm not very good at coding, but I'm very good at talking to them. Right? And I'm very good at distilling some of those information to some other people who are very good at doing other things, which you can say is like more of like a feminine skill. But like if I'm adding value to you, then why not, right? And
Yeah.
it does help, for example, it also helps to also keep building your skill. Like for me, going from builder perspective, actually building stuff, actually creating different changes in organization, into learning how to think about capital, how to think about investing, to understand a whole new group of people who are driving the mechanism of crypto, is going to allow me to add more value to other people that I'm in touch with. And so I don't really think of trying to label things. Do I face discrimination? I mean, people get rejection. Maybe I have more than other people, but I don't think it helps me to think about that and pout about it, right?
Yeah,
like
fair.
I'm like,
yeah, fair.
So,
all right, I think that's all we have for today. But before you go, is there anything you want to plug, or where can people that are watching this find you, or to say anything else you want to say?
Actually, this is also my first time like kind of go on public since 2019. The last time when I went public in crypto in similar manner was when I unveiled the Ethereum Foundation, the grants fund.
Oh, and you were the one that presented it? Oh wow, I didn't know that.
Yeah, so I was supposedly the face of it.
Face of the Ethereum Foundation, ladies and gentlemen.
I was the face of it, and then I did it, and it was a lot of pressure. It was a lot of pressure because people were waiting on it, right? Like, oh, Ethereum finally is like promising to give 30 million per year.
Yeah.
So there were a lot of, I guess, curation that went into it, and I didn't like it, so I didn't come up here in a long time. So, but if you want to find me, I have a Twitter. I will try to tweet more. But if not, I guess JMO just have to have me up on here again, maybe with another guest.
All right, you should tell everyone your Twitter handle.
My Twitter handle is Cattunti, CATHTUNTI.
All right, so if you're watching this, you can follow her there.
All right.
Thanks for coming on. I really appreciate it.
All right, thank you. This has been a great conversation.